Welcome back to another segment of the City Street Financial Report training videos. In this video, we're going to look at how to put in bonds and loans on your City Street Finance Report. We begin by navigating to the Bonds and Loans tab at the top of your report. For this year, the bonds and loan listing will be empty, but for all future years, any bond or loan that has an outstanding principal balance at the end of the year will be moved forward to this next report for the next year. All you will need to do at that point is update the principal and interest payments that you made during the fiscal year. Unfortunately, we were unable to move your previous bonds and loans from your previous street finance reports into this form. So if you have existing bonds and loans, you will need to add them here. To add them, select Add a New Row. The bond entry sheet will open, and you will be able to put in the details of your loan. The first thing you will put in is a description. That can be anything that you would like to designate your bond or loan as. Describe the project for which the money was borrowed. So if we did a project to repave Main Street, your description might say 2017 repaving of Main Street. To enter your existing loans, you are going to say that no, this is not a new loan for this year. By selecting yes, that this would be a new loan, you will automatically have the revenue from the bond issue moved to the revenue page, and you'll need to go and assign it into one of the funds. So if this is an existing bond that you are just putting back in from previous reports, you would select no, this is not a new bond issue. You will need to select your debt type. Your debt type usually is a general obligation loan, although it could be special assessment or something that is short term. So please select your debt type, and then you need to pick from your debt purpose. Now, quite often, road projects have multiple purposes. Maybe you did a street improvement and it had curb and gutter. Please select the debt purpose that is most accurate for the majority of your project. So if your project was primarily paving and construction with a little bit of curb and gutter, then pick paving and construction. Enter the issue date for your bond. You can click on the month, date, and year and put them in that form. Or you may use the calendar on the side to put in your date as well. So if you choose the calendar, you can just go ahead and scroll through. Otherwise, you can put in the date in the date field. The next line is the issue amount, and this is the entire issue amount. So if you had a bond that is partly streets and partly something else, you would put in that whole bond amount, and we're going to deal with how to break it into streets here in a couple more steps. So if this bond issue was for the repaving of Main Street and to redo the community room in the library, and the combined issue was for $1.5 million, you're going to put in the entire amount of the issue in the issue amount line. The next line is the issue amount adjustment. Now, these existing bonds probably have been receiving principal payments every year. So depending on how old the bond is that you're putting back in this report form, you may have a significant adjustment to do. So the amount of principal that you have already paid off on this bond is the adjustment that you need to make. So if we have made a payment or two payments on this bond in the previous fiscal years, and we have currently paid off $300,000 worth of principal, then we're going to enter that $300,000. The report automatically knows that that is to be deducted, so it doesn't need to be a negative number. It will automatically reduce the current principal balance by that amount. This is principal amount only. It doesn't have anything to do with the interest that you've been paying. That would be completely separate. We just principal balance correct for what it was in our general ledger as of July 1st, the beginning of this fiscal year for this report. The next line is critical as well. Those two lines are very important in this report form. The next line is the amount related to streets. And as we've talked about throughout this entire report, the only thing that we're looking for are street-related dollars. We realize that the cities do a lot of other things, and sometimes they're combined and quite interwoven. But the only thing that we need on this report are street dollars. So of that $1.5 million bond issue, that original bond issue, how many of those dollars went toward the street project? And that's a change from the last report form. The last report form was looking for a percent. Sometimes that calculation didn't work out very well for cities. Sometimes we had a pretty big rounding error in there trying to get the percent entered. So we've gone to an actual dollar amount for this one. The form itself is going to calculate the percent, do a whole bunch of math behind the scenes. So you actually need to put in the dollar figure. So of that $1.5 million, maybe that street portion was $950,450. leaving the balance of that for the library project. So the report is going to do that calculation and figure out what percent is streets versus what percent is something else. And it's going to take that calculation and modify your principal, interest, and registration fee payments so that only the street dollars are being recorded on this report form. Before we get to our principal and interest paid, we need to enter the year that the bond comes due. So maybe this bond was until 2030. And then we're going to go through and enter principal, interest, and any registrar fees or paying agent fees that you paid for this bond this year. Again, you are entering the entire amount that was paid because that's most likely what you have available in your general ledger. So if you made payments of approximately $150,000 a year, we're going to make another $150,000 payment this year. That's our principal payment. For our interest, we're going to say we paid $30,000 in interest this year, and our paying agent fees were roughly $1,800. When we save this form down here at the bottom, it's going to fill in on the list on the bonds and note sheet. So we'll be able to see our description, our principal balance. So that's our beginning balance minus our adjustment. So that's our principal balance as of the beginning of this report year. It's going to have our principal paid this year, our total interest paid for this year. And then it's going to do the calculations for you and show you of this principal that you paid, what percent or what dollar figure actually was that road amount. So versus the library amount, since we decided that this was a combination streets and library loan. Of that original $150,000 you paid in principal, the calculation is $95,045 belonged to streets. It does the same thing for the interest payment. And behind the scenes, you can't see it on this little quick summary, but it's also doing that for the paying agent fee. It's going to show you the principal balance for this bond as of the end of the year. Again, that's the entire bond, not just the street portion. And then you'll need to go back and check your expense page. If you didn't put in the expense amounts for making the payments on those bonds when you did your expenses, and you might not want to, especially if you have a combination bond. If it's 100% streets, it's easy. But if it's got something more than just streets involved in that bond, you may want to make sure that you go back to the expenses and double check. So we go to the bottom of our expense page, which is where the debt service lines are. And you will notice that they come up in orange boxes. That is a warning to you that something needs to be finished in this page before the report is going to be complete. So there's going to be errors on the summary page right now if you were to go look at the summary page. So your principal payment in the grand total column that's coming right over from the bond tab, it says, hey, you made a principal payment, and of that $150,000 principal payment, $95,000, just a little over $95,000, was street payment to repay that the street portion. And we need to know where you made that payment from. Where did those dollars come in from? Most often that's paid out of debt service. And so we're going to say, yes, debt service paid $95,000 and $45 toward that principal payment for this fiscal year. You'll notice that once I enter the amount for that bond payment, the error goes away, your boxes turn gray instead of orange, and you can move on without any errors. We do the same thing for the interest payment. Again, I'm making the assumption on this report that debt service is the one that's making the payments for this principal and interest payment this year. You could be paying it out of local option. You could be paying it out of road use. You could be paying it out of general fund. There's a whole bunch of options here, but most of you are going to be paying these big general obligation bonds out of your debt service account. So we go ahead and take care of our paying agent fee, and all of our errors are gone. So our expenses are taken care of for this part of the report related to the bond page. Remember to click Save down here on your expense page before you jump back out. And let's go back to the Bonds and Loans tab and look at putting in a new bond or loan for this fiscal year. Again, we click Add New Row, and we go in and say we had to take out a new bond. We built a bridge over creek at 146th and Howard Avenue. So we took out a bond for a new bridge project. When it says, is this new? We're going to click yes, this is new. That is very important. That's going to show the revenue from this bond issue on our revenue page. So we'll need to go back and look at our revenues. Our debt type is, again, most likely a general obligation bond, although it could be a special assessment. Our debt purpose, we need to look through and say, what did we do here? This one happens to be bridge building. We're going to pick an issue date. So this was sometime within FY20. So maybe it was 11/02/2019. So we did this back in the fall, getting ready for a spring letting and spring construction. We're going to have our issue amount. We need to enter our issue amount. Let's say this is a $2 million bridge. We won't have any amount to adjust. We haven't made any payments. It's a brand new bond, so there is nothing to pay down. Amount related to street. This time we're going to say we took out this bond entirely for this bridge project. Nothing else is in there. All $2 million is for street purposes. We're going to pay this off in 15 years, so 2035. And we may or may not have made payments during this first year. Sometimes there's an interest-only payment that first year. Sometimes you don't have any. If you have zeros, you'll need to go in and put in zeros. If you have no actual numbers to report, please go in and put those in as well. So you'll need to go through and save that. Just like the last one, it jumps into this list, and you can search this list. If you have a whole bunch of bonds, it's where your description comes in very handy. You can use the search feature and search for specific ones. So this new bond pops in here with its description, its principal balance as of the beginning of the year, and we made no payments, so the principal balance at the end of the year, or what's going to show up actually as our beginning balance also for next year, is that entire amount. Now, because it was a new bond this year and we have revenue to report, we need to go back to our revenue tab. You may or may not have entered the revenue when you went through and did the revenue tab the first time, but there's a category down here at the bottom. There's a line. There is a line here at the bottom called Proceeds from Debt. That is where you will need to bring in the money that comes in from your bonds. A lot of people were going to bring this into capital projects because they're going to show that entire project under the capital project account. You could also put it in general fund, or you could put it in road use. And you see this orange box is telling you that the bond page has a number reported that we do not yet have on this form. So it's telling you that that's an error. We need to say, yep, we did get $2 million. And we put it into our general ledger, and in this case, we put it into the capital improvement fund. So those dollars are sitting there waiting for next year. And we're going to want to go ahead and hit save. A good double check when you get done with putting in your bonds is to jump to the summary page and look and see if you have big negative numbers in your debt service column. If you do, it's guaranteed that you forgot to put in the revenue that's being collected to make those bond payments. So when we went through the first time on that first existing bond, and I put in bond payments on the expense tab, I didn't go back in and double check and make sure that on the revenue page, I was appropriately showing the amount of revenue that was needed to cover those payments. Those payments could be made by local option. They could be made by general fund. They could be made by road use tax, but quite often they are going to be dollars that are levied on property taxes. And you're going to show levied property tax dollars in the debt service column that are collected so that you can cover those bond payments. Once you get those put in there, your summary will look much better. So that's just a little tip or trick as to how to troubleshoot your bonds and loans payments. Next year, when you open your bond and loan payment page, all of the bonds that you put in this year will automatically be in there with the beginning balance for the year showing as what this year's ending balance was. All you'll need to do is go in and click edit. So this was the new bond from this year. Once we get to next year, we're definitely making principal payments on it. We go in and open it under edit. We show our principal payments for the year. Say we're paying $200,000 a year on this one. We're showing our interest at $41,000. And if we have any paying agent fees or registrar fees associated with this bond, we're going to go ahead and put those in as well. And then we would hit save to update that. So next year will be a little bit more simple as you only have to go in for all of those existing bonds and show your payments made during the year. That wraps up the bonds and loans segment. If you have a question, please don't hesitate to contact me. The combination bonds can be a little tricky, both on the revenue side and the expense side, when the report form, so the revenue and the expense tabs, are only looking for those street-related dollars instead of that entire amount. So sometimes that can be tricky. Be sure that what you're putting in is really just street dollars. So if you have expenses that are from a combination bond and you're showing just the expense amount related to streets, that the revenue that you're also entering to cover those payments is also only the street portion and not the entire amount that you have levied for debt service. If you have questions, please give me a call or send me email. I would be happy to help you with your bonds and loans.